focus on JSW Energy then. They posted a steady performance in quarter one, healthy growth in profit. That was aided by scale-up in thermal as well as renewable segment. Mr. Sharad Mahendra, the joint MD and CEO of the company, joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, congratulations. Pretty steady quarters, what you reported. Can you tell us about the contribution of Mahanadi and how will it scale up from here on?
This Mahanadi, KSK Mahanadi and O2 have played a really important role in our quarter one performance, which we feel is one of the highest performances what we have delivered. But at the same time, we have to remember that apart from KSK and O2, there are two more factors which have contributed to this performance in terms of generation, in terms of margins, is our wind capacity which got commissioned last year was mostly in the second half of the year, post the peak wind season. So this time that capacity being available in the peak wind season, which normally starts maybe around May and continues up to September and part of October, has also played a significant role in the generation growth, wherein our RE generation has grown by 54%, driven by this organic capacity which we had commissioned last fiscal, and also the O2 acquisition. Apart from that, our Ind Bharat Utkal, JSW Utkal plant of Odisha, wherein our second unit of 350 megawatt got commissioned in March 25, has also contributed significantly in terms of energy generation and the EBITDA in the quarter one.
All right. Well, sir, how did merchant rates pan out, especially in a soft demand year? How much is open capacity as of now?
Yeah, coming first, starting with the demand, of course, the demand growth we have seen has witnessed a negative 1.5% growth over last year. But last year, we have to remember that there was a very high growth of 11%. So on a high base, there has been a negative growth, one on the high base. And also, we have to understand that this time, early onset of monsoons also has resulted. So these two factors have driven a negative demand growth, but we feel that this is very temporary. Fundamentals of the country in terms of the demand, in terms of the growth drivers continue to remain strong. In our case, when we started the quarter one, it was the open capacity was almost close to about 1.3 gigawatt. As we are talking now, the open capacity is only 900 megawatt. And out of which only about 100 megawatt, 10% approximately, less than 100 megawatt is on imported coal based. Our Vijayanagar plant, full capacity of 860 megawatt is now tied up under long-term power purchase agreement and has shown a significant increase in the generation as compared to last year. Out of our balance 800 megawatt of open power, which is based in JSW Utkal plant in Odisha and the KSK Mahanadi plant. We have to recall that both these plants are in the coal belt. The fuel cost is extremely low. This gives us a big advantage because of the low cost of generation to sell in the merchant market. Lastly, what you asked about the tariffs, merchant tariffs during this quarter have averaged in the exchange at 4 rupees 41 paisa. But I'm happy to tell that we have been able to sell our entire untied capacity, which I just mentioned, at an average price of 6 rupees 14 paisa through bilateral and medium-term contracts.
Okay. So, Mr. Mahendra, putting it all together, when you've got 3 new units on stream and that O2 platform, can you give us some sense or a guidance for fixed EBITDA growth for the current year, FY26?
See, in terms of KSK Mahanadi, we have already demonstrated the performance with 857 crores of EBITDA in quarter one. And we all know that last year, the KSK Mahanadi, the operating EBITDA was about 2,400 crores when we were not there. We only came on 9th or 10th of March last year. So we are absolutely certain that seeing the quarter one performance and the efficiency improvements which we had started immediately after the acquisition in the month of March, Some of them have already been implemented, some have been partly implemented, and balance will be implemented during the balance part of the year. We are quite confident that this benchmark EBITDA of last year, operating EBITDA of 2,400 crores, will be definitely significantly higher than that. And that will remain higher on a sustainable basis going forward, or maybe next few years. In terms of the EBITDA, as I said, Q1 performance has already given us an idea. Maybe it can be checked upon. We normally are not in a position to give the numbers for going forward. No one knows. But we are absolutely certain that with the sustainable operations, sustainable EBITDA, entire capacity tied up, barring this 90 megawatt of untied capacity, we are certain that we'll be consistent and will be demonstrating what we have demonstrated in Q1.
Okay, well, Mr. Mahendra, what is the capex required for reaching the 2030 target? If you can wrap it up with this, what are the internal tweaks between earlier and right now? How will you fund this capex program as well?
As we had said earlier, when it was earlier before our announcement of Strategy 3.0, we had said that 20 gigawatt by 2030. Then we realized with the order books, the PPA signed, work under construction, we had revised that to our capacity targets to 30 gigawatt by 2030 and 40 gigawatt hour of energy storage by 2030. And we are absolutely on track. As we have said immediately after the acquisition of O2 Power, with 1.3 gigawatt of operational portfolio which we acquired, and we reached about 12 gigawatt of capacity, that will be adding another 3 to 4 gigawatt in the current fiscal over and above that 12. And going forward, the PPAs which we have to deliver maybe in next 2 to 3 years time, which is total 10 gigawatt, we are certain that we will be achieving. So we are absolutely certain of reaching 30 gigawatt of capacity, operating capacity by 2030 and 40 gigawatt hour of storage. As capex, we have given the guidance for this 30 gigawatt by 2030 and 40 gigawatt hour storage. The total capex we envisage will be almost 1,30,000 crores during this period up to 2030.
Okay, we'll take a quick commercial break. Thank you very much, Mr. Mahendra, for joining us and running us through all those updates. We come back with Arul Selvan, Managing Director of Cholamandalam Finance, Investment and Finance, to talk about their first quarter numbers.